Good morning and a warm welcome. Holly Shields here for Kalkine TV, reporting to you live from Sydney, and you're watching the Global Markets Roundup. Let's dive into some key highlights from Monday, starting with the US market. Well, global equity markets rose while the US Treasury yields dipped as investors were buoyed by a better-than-expected corporate earnings season that kicks into gear this week. The MSCI World Equity Index, which tracks shares in 50 countries, was up 0.29%. Meanwhile, the S&P 500 Index and Dow Jones closed at record highs yesterday, October 25th, ahead of quarterly earnings of big tech companies like Apple, Amazon, and Alphabet this week. The S&P was up 0.47%, while the Dow Jones rose 0.18%, and the Nasdaq Composite rose 0.90%. The small cap Russell 2000 was up as well, 0.93%. Market participants are in high spirits as the third quarter earnings season is in full swing. Several major financial and retail companies have reported robust growth in the quarter. The earnings come in the backdrop of inflation, supply disruptions, and labor shortages, and which is why some analysts were initially worried over the quarterly performance amid these factors. Traders will now eagerly wait for the earnings of mega-cap tech companies that have around 30% weightage on the S&P 500 index by market cap. According to Refinitiv data, some 165 S&P 500 companies are expected to report this week. Analysts expect the index to grow by 34.8% in the quarter year over year. And on top of that, of the 119 companies reported so far, 83.2% beat Wall Street estimates. Yesterday, consumer discretionary and energy stocks led the gains on the S&P. Meanwhile, utilities and financial stocks were the bottom movers. 9 of the 11 sectors in the index stayed in green. Well, with that said, it is time now for a short break before we move on to the Asian and Australian market updates.
Hi there, James Preston for Kalkine TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google to brand new tech startups vying for your attention. Kalkine's Tech Beat has the latest in what matters in the world of technology. Join me every single Thursday on the Tech Beat, exclusive to Kalkine TV.
Welcome back to the Global Markets Roundup. European stocks closed flat on Monday as gains in banks and commodity-linked sectors were offset by losses in industrial stocks on rising bond yields, and as the outlook for the telecom sector deteriorated. The Pan-European Stocks 600 index gained 0.07%, with concerns over rising inflation and slowing economic growth also weighing on sentiment. Germany's yield curve steepened on Monday, while Italian bonds outperformed after an unexpected credit rating outlook upgrade. The biggest move in the yield curve was the gap between 15 and 30-year German bond yields, which widened 5 basis points to 71, extending the jubilation. The domestic benchmark FTSE 100 registered a fresh 52-week high, with marginal gains over the period highs as investors remained optimistic with the ongoing corporate earnings season. On the other hand, the mid-cap reflector FTSE 250 encountered a choppy trade due to a mixed set of earnings and medium scale being at the forefront of battling the business tightening and adversities in the operative environment. All this as Japanese stocks dipped yesterday on disappointing earnings, with semiconductor-related shares among the hardest hit, taking their cues from falls in the US tech firms on poor earnings reports and concerns about the Federal Reserve's tapering. The Nikkei 225 index fell 204 points, or 0.71%, and at one point slipping below the 28,500 mark to a 10-day low. Meanwhile, the broader topics was down 0.34%. And Chinese stocks closed up on Monday, led by environmental protection stocks on the country's measures to achieve carbon neutrality, while property firms fell after reports said the government would roll out a pilot real estate tax in some regions. The blue chip CSI 1300 index rose 0.4%, while the Shanghai Composite Index gained 0.8%. South Korean shares ended higher on Monday as well, ahead of key corporate quarterly results at home and abroad. The benchmark Kospi closed 0.48% higher, while Australian shares may continue with their rise today, likely supported by gains in domestic miners and energy stocks on the back of robust commodity prices and strong overnight finishes on Wall Street. The ASX 200 rose 0.3% on Monday, and listed tech shares like Afterpay and Xero are expected to do well today following a strong night on the tech-focused Nasdaq. Meanwhile, the Aussie dollar hovered below recent peaks on Monday as traders went to see whether the upcoming Australian inflation data will match a red-hot reading in New Zealand that lifted the weak currencies. And the Aussie dollar crept up 0.2% after rising as far as 0.7546 US cents last week to test resistance around to its 200-day moving average. US Treasury yields were lower as uncertainty about the Federal Reserve would raise rates to curb rising inflation weighed on market sentiment. The US dollar rose from a one-month low on Monday ahead of central bank meetings and economic data coming later this week, boosted by the prospect of a tighter US monetary policy. Meanwhile, gold prices rose about 1% on Monday as a retreat in US bond yields and persisting worries about inflation lifted this safe haven asset ahead of major central bank meetings this week. Spot gold gained 0.8% and US gold futures for December delivery settled up 0.6%. Dalian iron ore futures advanced on Monday as well, recovering from last week's sell-off that dragged the benchmark prices to multi-week lows. But worries over slumping in steel demand in China kept overall enthusiasm in check. Iron ore's most traded January contract on China's Dalian Commodity Exchange ended trading 1.7% higher at 688.50 yuan a ton. This slumped to a one-month low of 642.5 yuan on the 21st of October. All this as copper prices recovered on Monday from 2 sessions of losses, as they drew support from concerns over low investors and inventory's quest for a hedge against the rising global inflation. 3-month copper on the London Metal Exchange gained 1.6% and oil prices reached multi-year highs on Monday, before steadying as tight global supply and the strengthening of fuel demand in the US and beyond unsupported prices. Brent crude futures gained 0.46 cents and the contract reached a session high of 86.70 a barrel, its highest level since October 2018. Now for a look at the newsmakers so far, just before we wrap up, Suncorp reported the natural hazard costs incurred between the 1st of July were between $382 and $492 million. And Alcidion has reported an operating cash loss of 3.4 on sales of 6.6 million for the quarter ending 30 September. Well, that's all for now, but keep watching Kalkine TV because we have many more shows lined up for you today. Holly Shield signing off.